basically the inflation rate on an annual basis has gone from 7.3% in the September quarter to 7.8% in the December quarter. And one of the factors that is, I guess, catching economists' attention is the underlying measure. The core measure, the trimmed mean, actually went from 6.1% to 6.9%. Now, that typically strips out the volatile items and is something the RBA looks at closely. It likes to keep inflation between 2 and 3%. So that 6.9% number will be definitely closely looked at by the RBA. It is worth noting, though, the RBA has expected inflation to peak at around 8% in 2022. So this is certainly within its realm of possibilities, but a very strong number, as you say, the highest since the mid-1990s. And it's probably no surprise to people that the most significant price rises in the period were for domestic and international holiday travel and accommodation, new dwelling purchases by owner-occupiers, and electricity. Interestingly, we did see vegetable prices come down around 10% as more favourable weather conditions persisted in that December quarter, but certainly a very strong number indeed.
So what are economists saying then? Is this the peak?
Well, ahead of the number, there was an expectation that this would be the peak. Of course, we've had a huge run-up in inflation over the course of 2022. It's the reason the RBA has been trying to keep inflation down by raising interest rates. It has not yet succeeded by the looks of these numbers. Yesterday, there were some signs in a NAB business survey that showed in some areas of businesses, price pressures were starting to come down. And certainly in the US, it does look like there are more signs that inflation there has peaked. But I just spoke to the chief economist at KPMG, Brendan Rinn, and he said there are some concerning indications in these numbers, particularly when it comes to the tight labour market.
There's probably still a little bit of growth going forward. The thing that we're most concerned about in these numbers is what's actually happening as a consequence of labour costs now coming into the system. And that's also going to be what's really going to be focused, the RBA is going to be focused on as well.
Well, that's a big question, isn't it? The RBA has its first meeting of the year in a few weeks' time. What's it likely to do?
Well, it was really interesting going into these numbers. The market pricing, and that's not economists, it's the financial markets, we're expecting around a 50-50 chance. It was 54 to 46% chance of interest rates going up by 25 basis points or 1/4% on the 7th of February. By the time the inflation data was released and say 5 minutes later, the expectation for a rate rise had increased to around 75%. So, look, it has certainly increased the chance of an interest rate increase in February. The current cash rate is sitting at 3.1%. That would take it to 3.35%. Many economists think that's where it will stop, but there are those at the likes of ANZ and Westpac that think the RBA will get as high as 3.85% by the middle of this year. When I spoke to Brendan Rinn, he said he had expected that the cash rate would peak at around 3.35%, but now he says there's a chance there could be more rate rises on the cards.
Our expectation is that you'll continue to see your rates rise, at least in the short term, although I think we are coming close to the top of the interest rate cycle. We've described monetary policy acting a bit like a brick with a rubber band. You know, you can stretch it and nothing seems to happen. Then all of a sudden you've got a brick coming at you at a pretty fast pace. And so the economy is likely to slow down pretty rapidly as a consequence of the 300 basis point rises that we've already had to date.
And have the markets reacted to the number?
Well, as I pointed to, that market pricing did change, and the result of that expectation that the RBA will raise interest rates again next in 2 weeks' time was that the Australian share market actually was trading flat ahead of the numbers and then started to fall on the expectation of higher interest rates. So you can see there now the All Ords and the ASX 200 index down around 0.5% each. When it comes to the currency, though, it headed in the opposite direction on the prospect of higher rates jumping against the greenback. It's currently sitting at 70.57 US cents.